A lot of people have been saying that to us, and we've always wanted to be in Delhi, obviously being, the capital and such a big market in India, but we just never found the right location. I think when we, look at a space, few things are important to us, being in the right like social infrastructure, but also having a building big enough to make it meaningful for us to be there. And that has always been a challenge in Delhi because there's just smaller spaces, smaller offices, multiple owners a lot of the time in a lot of the commercial buildings. So this was like the perfect fit. We actually saw it when it was just land, and today, is where the first tenants, and the building is just finally completed. It's connected to the metro station. So everything, was perfect. And when we wanted to do it, we wanted to make sure it's right. So every WeWork location that you see that we build has actually a pretty standard set of amenities, and this space also, covers pretty much all of that. We always start with a very open and, vibrant sort of entry experience. So whenever you come into a WeWork, you feel, like what is this buzz? Like what's actually like happening here if you come in for the first time. So that's how this building is set up, and it's kind of unique because it has two wings. So it allows you to split up and has two common area spaces almost. We have an amazing games room that has, TT, carom, some foosball. I think we have one or two arcade games in there as well. So when you're working or not working, you can, go and take a break there. And we have this amazing sort of, spread of all of our meeting rooms. We have a large boardroom that covers almost, 20 people. We have an event space over there that will allow you to do a town hall or any type of team gathering. And then we have all of these offices internally, which, for companies of different sizes can use and rent for as low as a month and going all the way up to, 5 to 6 years as well.
Right. So what about your expansion plans then? You're in 50 locations now, all across India. What is your plan of entering tier 2 cities? Do you think there is some demand over there because the culture of co-working spaces has not really developed in tier 2 cities?
Yeah. So as WeWork, we are definitely a mid to premium, player in the market. We, like you see in our spaces and that you've experienced, that we spend a pretty, heavy amount on our capex. We provide like a really good quality space. And the service level also that we offer is, definitely above everyone else. Also, our customers that we're aiming for are the top tier of Indian companies as well as the top Fortune 500, businesses in the world. So around 80% of our business comes from large enterprises, large global players and Indian players. And then the remaining part of our business, you will see, are some of the higher quality startups, mid-segment, MSME sort of companies. And these companies primarily reside within the top metros. And a big reason for that is also social infrastructure. People are migrating to these big cities for a better quality of life. So we for the foreseeable future will continue to stay within the metro.
Do you want to give some more details into the kind of, the deals or the brands that you're signing up with? Numbers, if you could share some numbers.
Yeah, so we've seen enterprises use us for various different parts of our value proposition. So let me take, flexibility as scale as an option. Commonwealth Bank of Australia was setting up a GCC in India. When I met them, they had employees in some of these IT services companies. So they were still, I can't remember which one, but they were still offshoring. And then they were getting ready to now have their owned and operated space. So they started with us with, I think a floor and a half or 2 floors in a location. And over the last 3 years itself, they've grown to around 6 floors. We're now looking at a new tower and a new space. So no one else can give them that, ability to scale at that speed, apart from us. Because it's not just taking the traditional space, it's having it fitted out, it's having the services ready to operate. So that's the spectrum of how, companies are starting to use it.
Right. So you mentioned a whole host of companies that are starting to use WeWork and of course your spaces. But isn't profitability an issue? How difficult it is to be profitable in this space? Because it's an intensively cash guzzling business. There's a lot of cash involved, right?
Yeah.
A lot of money involved as well in terms of your rent costs, your lease costs, etc. Then there are maintenance, overheads, electricity, so many other costs included. So isn't profitability
So we've,
issue in this business?
actually over the last few years, and even as we were building the business, we've always been focused on the unit economics. Anytime we select a building, you asked me why so long Delhi. One was location, but the other thing was like the economics were just never making sense because the rent was so expensive in some of the other locations like Connaught Place or, whatever it is. We have built the business to be breaking even at between 60 to 65% occupancy across the portfolio, and today we're sitting at 80 plus percent in terms of occupancy. The last 2 years have been profitable for us, right? And we're only a 6-year-old kind of company that was scaling at almost like 100% year over year. So last year we ended with around 250 crores of EBITDA on a revenue of about 1,400 crores. So it's close to around 20, little over 20% profit at that operating level, where we're still growing and we continue to actually put cash in. You mentioned capex. So like I mentioned earlier, it's not, the landlords are also investing with us, which allows us to spread our capital a lot more. And because we're generating cash flow on a month-on-month basis, we're able to reinvest a part of that back into opening these locations. So the business is actually quite sustainable, and it's actually a really great cash flow generating business.
So you're saying it's a cash flow generating business. On that note, I'm going to ask you, how are you guiding for the year 2023? Any outlook?
Yeah, so if you see the last few years, we will continue on the same trajectory where in 2021, 22, we ended the year with around 800 crores of revenue, and we were negative 50 crores of EBITDA. The year after that has been 1,400 crores and positive 250 crores of EBITDA. We see a very similar trend into this year where we will grow revenue by at least 40 to 50%, and we hope the bottom line is actually going to grow close to 100% this year.
Close to 100% this year is what you're saying. So you're saying that there's been no impact of the global economic headwinds. I mean, everybody's been talking about India as a bright spot as far as doing business is concerned. I'm going to come to WeWork Global as well. But let's first talk about the global macroeconomic headwinds. The startup sector has been going through a funding winter of sorts. PE and VC investments have seen a cut.
Yeah.
Hasn't that been challenging for you?
Not really.
And what about margin pressures?
Yeah, so there are, I would say, segments and maybe parts of, the ecosystem that have been more heavily impacted. These are companies that were anyway burning cash, didn't have enough runway. These are generally, what I would say was like generally unhealthy-ish companies to start with anyway. And like I mentioned, 80% of our business comes from the Fortune 500, like top Fortune 500 companies. They have not stopped. In fact, I would say with everything else happening in the world, more work has shifted to India, and actually, hiring in India, even pre-COVID to after, you'll see most of these organizations have substantially more employees than they did, prior to COVID. And even with certain correction, it's not ever going back to a 2019 state. It's slightly lower than what they went, in terms of growth in 2021, maybe when the market was hot. So with that light, there's still a shortage of supply of real estate, in India. Their vacancy rates in India, even in COVID, had reached around like 15%. Today they're back to like 9%. So single digit vacancy rates in, in real estate, and crazy hiring numbers. We still hire 1 million engineers, year over year in India across all of these companies. And so that pressure, I don't think has hit. Certain segments, like I said, have definitely hit, but then there have been other segments that are growing faster, in that space.
Right. Now I want to talk to you about WeWork Global and what's, happening as far as WeWork Global is concerned. So, just earlier this week, we actually, heard from WeWork Global, and I quote, "Substantial doubt exists about the company's ability to continue." What do you think contributed to that, and will that have a bearing on the India business at all?
Yeah. So the India business was the first ever franchise or licensed business for WeWork almost 6 years ago. When we started this, we were the first first non-owned entity of WeWork in the world. And the business is majority owned by Embassy Group, which is a developer that's been around for the last 30 years. We have Asia's largest REIT and have multiple platforms in the real estate space. So our business and the way that we've grown it has always, like I mentioned, kept a strong focus on the fundamentals. And like I mentioned, our profit numbers, mean that we're healthy and completely insulated with whatever's happening globally, and nothing that's happening globally impacts India, in any way. I can't say too much about the global business. All I will say is that I have seen, all the numbers across all the countries in the world, and every single country outside the US has been doing incredibly well. People are fully back in the office. Occupancy rates are high. If I look at those businesses in isolation, they're also making money. I think the problem generally is, the US at this moment in time, for multiple reasons. It's, return to office, I think, has been a challenge across multiple cities. And there's also generally pressure within the commercial real estate, segment. So I think WeWork is obviously getting clubbed in with that, even though that pressure is actually hugely beneficial to WeWork because it means getting, cheaper rentals, cheaper buildings potentially in the future, and being able to, right size some of that business. In lieu of the news that's come out, again, I can't say too much, but the US has its own bankruptcy laws or code, and there's a differentiation between a liquidation and a restructuring. And WeWork is, looking at the restructuring route as, a way to correct the business and continue to serve our members and, serve partners all over the world. So, I feel actually pretty good, even though obviously press, captures it in a certain way and likes to talk about, maybe like a quoted text within that.
Well, that's what.
Yeah,
we
and I don't.
We're only quoting them.
Yeah, and I don't blame that, but people who maybe understand the legal side of it a little bit better, or understand the financial benefits of going down this route, will tell you that this seems like the best way to kind of actually turn around the entire story.
Because I think when WeWork started globally in 2010, 2011, it was really, really regarded as one of the best startups, right? The most sought after startups. You had investments from SoftBank Global, JP Morgan as well, Goldman Sachs as well. So talking about, funding, you've also raised funding from, WeWork Global and of course ICICI Bank.
Yeah.
Are you sufficiently funded? Do you want to share some details?
Yeah, we obviously those have been incredible partners, to us. WeWork Global themselves came in the middle of the pandemic and, helped to support us We just recently closed almost a 550 crore line with Bearings, private equity, Bearings Asia private equity as well. So, and that was just in December. So the business is sufficiently, funded. And like I mentioned earlier, we're generating free cash as well, even after deploying capex spend, which means that we really have no requirement to raise any external capital at this moment in time. And even with the growth plan that we have set for ourselves for the next few years, we are sufficiently sort of placed right now.